This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
This is the interest, your balance of today's news. I'm Mike Savino, and these are your headlines for today, May 3rd. Our top story, the Federal Reserve kicked off a two-day meeting that's likely to end with another rate hike. In fact, many experts think that the Fed will get even more aggressive as inflation remains at a 40-year high.
Obviously, mortgage rates are likely to get up to 6, 7, even 8% in the next 18 months, say.
And now for a preview of what the Federal Reserve Board is going to do this week, we're joined by staff writer Steve Good. Steve, thanks for joining me.
Morning, Mike.
Morning. And what do we expect the Federal Reserve to do over the next couple of days?
The Fed is likely to raise rates by a half point when it wraps its meeting Wednesday. The last time the Fed approved a hike like that, 22 years ago. Some economists are worried that the Fed will go too far. GDP shrank by 1.4% in the first quarter, and there's some concern further rate hikes could push us into a recession. But not everyone agrees. I talked with one economist who says the Fed is just bringing the rate back to historically normal levels. He also says that while the country's GDP shrank in the first quarter, some deeper metrics pointed to strong consumer spending.
Business investment was up almost 10%. I mean, it was a very peculiar report because if you dissect it, the underlying features look like the economy is actually doing fairly well.
In other news, the U.S. Department of Housing and Urban Development has restored the Federal Housing Administration's loan review system. The system was shut down several weeks ago so that the FHA could resolve various document errors. Officials say that for technical reasons, the FHA was unable to revert lender monitoring reviews and some other loan reviews. The National Association of Home Builders is calling for President Joe Biden to fix problems that, quote, threaten to derail the current housing economic expansion. The association blamed rising interest rates, home prices, and rents, and higher costs for lumber and building materials for significantly decreasing housing affordability, especially when it came to entry-level buyers and renters. The industry believes these challenges will grow worse if meaningful steps are not taken to allow builders to increase the supply of affordable single-family and multifamily for-sale and for-rent housing, NAHB Chairman Jerry Conter said. 10,000 members signed the letter seeking immediate action to address supply chain issues for lumber and building materials. And finally, add executives at Fannie Mae to the growing list of industry insiders warning of a recession. The government-sponsored enterprise reported a 12% dip in earnings in the first quarter compared to last year. Fannie Mae President David Benson said he also sees, quote, increasing odds of a modest recession.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.